Hi guys, welcome to Gold Price Daily Analysis. Today is Sunday, 7th of April 2019. This video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We are going to start our core analysis right after a quick recap. We have been waiting for important economic data to be released from the United States, and we are going to start with the non-farm payroll for March. The non-farm payroll for March came above forecasts, and the unemployment rate came in line with forecasts, and the average hourly earnings month to month and the average hourly earnings year to year, both of them came below forecasts. What matters for us is the non-farm payroll and the unemployment rate. Both of them came good for the dollar, bad for the gold. For the gold response, we have witnessed a sell-off in the gold right after the NFP news was released. The sell-off was limited by the level 1,284.85 support, and gold managed to secure a higher low but failed to secure a higher high. However, we do believe that the gold price is neutralizing and started to have a bullish momentum. However, for the strategy cap, we said that if you are in a sell position, I advised you in the last episode to exit the sell position at a decent price and to wait for a break and close above the level 1,300 in order to buy, or below 1,280 in order to sell. So we were not decided yet, and we are not decided yet so far. Okay, but it was better, and it's better to stay away from the market and make sure you are not in a sell position. That's all for the strategy recap. We'll move on now to the economic calendar. On the economic calendar for Monday, we will start with the United Kingdom. We will be waiting for the inflation expectations with low importance. From the United States, we'll be waiting for the cap goods non-defense XR month to month and the factory orders month to month for February with medium importance. That's it for the economic calendar, and we'll move on now to the technical indicators. On the last trading session on Friday, we had a trading range from 1,284 to 1,293. Numbers unrounded, and the market is closed. For the closing price, gold managed again to close above 1,290. Actually, it closed above 1,291. Numbers are rounded. Moving on to the moving averages. For the 20 days, it's 1,301. For the 50 days, it's 1,308. And for the 100 days, it's 1,282. And for the 200 days, it's 1,250. We are above the 100 days, 200 days daily symbol moving averages, and below the 50 days, 20 days daily symbol moving averages. Moving on to the RSI readings. For the 1 hour, it's 53 bullish. And for the RSI 4 hours is 49 bullish, and for the RSI 1 day is 44 bearish, but it's enhancing. Moving on to the supports and resistance. The supports are located because we are in the same place actually. Okay, supports, the first one at 1,288, 1,285 and 1,281. And the resistance 1,293, 1,297, 1,300. That's all for the technical indicators. We'll move on now to the trading strategy. For the trading strategy, trend is neutral and the price action is neutralizing. We cannot say yet it's positive because we have had a higher low, but we did not have a higher high. We are below 20 days, 50 days daily simple moving averages, and the US dollar is testing highs at 97,500, 97,700. Something very important to say, that the gold showed strength and rebounded 2 times strongly back above 1,290, which means that the pressure to the downside is not enough to break 1,280, and it's easing. Myself and other market analysts, okay, we do expect a sell-off to take place in the US equities. due to the lack of the updates on the trade deal between US and China since the President of the United States, Donald Trump, announced that the deal will need 4 weeks to be finalized. So we don't expect much of updates to move the market or to keep the positive momentum. One more thing, that the FOMC statement is due later on the coming Wednesday, and expected to be extremely dovish or negative, with a possibility to discuss a rate cut. If that took place, then the dollar shall witness a high or a rough sell-off. Uh, Taking this into consideration, we do expect a rebound in the gold prices, okay? Uh, but our advice to you is to wait a break and close above 1,300 to buy, and a break and close below 1,280 to sell. This is the safe play. This is how it has to be. If your risk tolerance and risk appetite are high, and with no hard feelings, start buying with a stop loss of 1,270 with a target of 1,309. If we can stay above 1,309, then the other target will be 1,324. If we can stay above 1,324, the other target will be 1,346, and maybe more. However, that's it for today, guys. Thank you for watching. Please share, like, and subscribe, and I will see you tomorrow in another video.